What would a college student do without a little financial help? After all, there are books to buy, tuition to pay, and let's not forget about those late-night pizza orders. College life, while exciting, can also be a maze of financial needs. From textbooks to tuition, housing to food, the costs add up. That's why it's crucial to have diverse financial sources to tap into. But where exactly does this money come from? Let's dive into the world of college finance and find out. First up, we have internal sources of finance. These are funds that come from within the student's own resources or their families. Let's dive in, shall we? Retained profit refers to the savings you've built over time. Maybe you've been working part-time or saving your birthday money. This money can be used to cover your college expenses. Net current assets are the value of your possessions or assets that can be quickly converted into cash. Think about selling your old video games, books, or even your car. Then there's the sale of assets. For instance, if your family owns a second property or a valuable antique, selling these assets can provide a significant boost to your college fund. So, as you can see, you may already have some resources at your disposal. But if you're like most college students, you're going to need a bit more help. Now let's turn our attention to external sources of finance. These are funds that come from outside the student's immediate resources. Starting with owner's capital, this is money that you, as the student, invest into your own education. It can be savings, gifts, or any money you've personally accumulated. Loans are borrowed money that you'll need to repay over time, typically with interest. They can come from banks, credit unions, or even from private lenders. Crowdfunding is a more modern approach where you solicit small amounts of money from a large number of people, often via online platforms. Next, we have mortgages. These are loans specifically for real estate. They're used less frequently by students, but can be an option for those who own property. Venture capital is funding from investors who believe in your future potential. It's less common for students, but not unheard of, especially for those starting businesses. Debt factoring, hire purchase, leasing and trade credit are more applicable to business contexts. But it's good to know they exist. Grants, donations and peer-to-peer lending are other options to consider. Grants are funds you don't have to pay back. Donations can come from anyone who supports your educational journey, and peer-to-peer lending involves borrowing money from individuals instead of institutions. Lastly, invoice discounting is a way for businesses to borrow money based on amounts due from customers. It's less relevant for students, but still part of the financial landscape. As you can see, there are many ways to finance a college education. So whether you're a pizza-loving sophomore or a senior eyeing graduation, remember, you have options. It's all about finding the right mix for you. So there you have it, the many sources of finance available to college students. From your own savings to a generous donor, the possibilities are plentiful. Whether it's leveraging retained profits or net current assets, selling assets, or tapping into external sources like owner's capital, loans, crowdfunding, and more, there's a solution for every financial situation. Remember, college is about more than just getting a degree. It's also about learning to manage your finances. And with the right resources, you can do just that. So go forth and conquer those financial challenges $1 at a time.